Hello, hello, hello. Hope you're doing very well today. It is the 24th of May 2020. Crypto is going just like we planned, and the indices look like they are in a tough spot. Let's look at what we can do for the coming week. Looking at the total market cap chart, so this is exactly what we were looking at last week. These key levels, and you can see that this week currently we have been holding the POC of the range, but what I had spoken about was that if this is the level, this 220 level is the level that currently we are to build some kind of structure from. I highlighted the importance of this level as a higher time frame support level, which is significant. So if you're supposed to build some structure and actually get the bigger correction later, then a possible retest of it would be ideal. For now, for this week, we have not done that. For now, for this week, we have held this 230 level on a weekly closing basis. We still have 5 hours left for the weekly close, but look at this 230 level. I will just build a level here. Just look at this 230 level on a weekly closing basis. So you can see that it has been very significant on the total market cap chart, and since we have broken it, we have not closed below it. So not only this week, I would watch out for this level for the next week as well. And if on a weekly closing basis this is a level that is holding, I would say that the bigger correction that a lot of bears are looking for, it might be coming later. Let's quickly look at the daily time frame. So on the daily, essentially this is where we were at the end of at the beginning of last week's review, and what I was telling you was that just getting one retest of this level and building a structure like this is quite weak. But what you can see now is that we have had 1 2 3 4 5 6 about 7 or 8 significant days where we have tested this level, and essentially this is the 10k BTC level. This is a level on the total market cap chart, but for BTC this is the 10k level, and we have had possibly more than a week of testing this structure where we have currently failed. What I would say is that the next time we're going to get up here, there is a pretty decent probability that we will go through the next time. But our question for now is how deep we can go. I think this POC level currently, what I did mention is that this is the POC of the entire range since 2017. So price is strong above this, but considering what we are doing now currently on BTC, we will get to that chart. This level does look more likely to get taken out, and if it does, this is a decent probability that we do end up getting a retrace of this and a retest of this level. And what I would say is that if this retest holds and that condition for the weekly close in the coming week, if that condition is satisfied, then the outlook that I was looking at last week as well, that we built some kind of a complex structure without giving a deeper retrace and moving out of here. So a retest of this and a reclaim of this POC would give you quite a decent confirmation that we are ready then to take out 10k on BTC and this big level on total market cap to then make a larger move. So do keep a lookout for that. Watch for price to come and test this level. Watch for this level to hold, I would say, all the way to possibly even a wick to somewhere around 210, 215, possibly a wick to somewhere even around 215 is possible. And Yeah, that would mean just taking out this 218 level that we have wicked down to. So if we can wick down to somewhere around 215, take out this level, fake everybody out, get a decent weekly close, and then eventually start reclaiming this would be the bullish part of the price action. On the other hand, if we do end up coming down here, holding this level, testing this as resistance, and coming back down, then we can start looking at the other scenarios that we have in mind, you know. So, but for now, there are a few reasons that I am supporting this first scenario that I'm talking about. I will discuss those reasons when we get to the BTC chart. Currently, that is the chart that is um, kind of defining what the total chart would do. Though these levels that we have highlighted are quite significant, and they're playing their part in reflecting what can be possible. This does not look like a very pretty structure, but you can see, like I have mentioned before, this resistance is exhausted, and if we do come here after building a better structure, this is bound to get taken out. And what we do once we do take out 10k BTC and basically the 10500 level, there is a lot of potential right there. So let's dive into the altcoin market cap chart and see what we can find in. For the altcoin market cap chart, you know that we've been following this since December last year. If you've been following me on Twitter, somewhere around here, this is where we began to track this fractal. And I mean, essentially it's 2014, 15, 16. The last time that we built this was the previous market cycle for BTC. And you do know that once we did test this bottom, confirm it as support, and break out of it, essentially we were at the precipice of a new rally, across the board. And even though odds have lagged behind BTC, which is what they always do at the beginning of the rally, eventually we do end up getting some pretty interesting price action. So for now, I think this fractal has manifested pretty well, and unless a price is doing something very surprising, it does quite look like we are in this part of the fractal, where essentially price has to build some kind of a structure and a consolidation, and eventually, because BTC is going to be moving out of here, alts will also carry on with Bitcoin and reflect the beginning of a new wave in the entire market cap of cryptocurrencies, not just altcoins. But essentially, I just wanted to point out that this fractal has been working very well, and it does look quite ripe if you look at it quite carefully. And all we have now is a tight consolidation, and where we will have pretty easy levels to know if prices to be breaking up to the north. And I do think that will be in correlation to BTC breaking 10,000, and there is a decent probability that once that does happen, it is going to be a strong move. So keep a lookout at that. Also keep a lookout at this fractal. It does look reasonably accurate, and looks like we are on the precipice of what it could be. Also potentially what is possible is that if BTC does end up making a deeper correction, it still does not invalidate it, because you do know once we did have that first impulse in the end of 2015, we did have a decent amount of time. It was a couple of months of sideways of consolidation. So we have made that initial first impulse, and we've had 1 month of sideways consolidation on odds. So if BTC is correcting, you do know all BTC pairs are doing pretty decent. So it is still possible that if BTC is to have a deeper correction, we are still building a longer consolidation before the move can continue. So instead of the altcoins BTC chart, I just wanted to zoom out to a macro picture, and what I want to talk about is essentially where we are, in the larger scheme of things. First of all, what I want to say is that we have, again, I keep repeating this, we have a very small sample size. So you do need to be patient, and you do need to understand that this is still a very new asset, and it is a very new asset class, and we only have one previous market cycle, to study, and to understand the mechanics of this ecosystem. And what I want to show you this chart for, and what we should be understanding from it, is money flow. How money flows within the ecosystem, how when it flows into the ecosystem, how it is distributed. So what you can see right now, if you've been on Twitter, if you've been watching, and if you've been trading crypto, we've been having decent bounces on quite a few altcoins. And crypto Twitter has been calling alt season all the way since after 2017. Every little bounce that we've had has been alt season, and everybody who is skeptical about alt season when everybody else is calling an alt season on every bounce, it is ignored. I've had, not that I'm complaining at all, I do not have any interest in being part of the crowd, but I have essentially had 6,500 followers on Twitter since 2017. And essentially, I think it was early 2017 when I was a bit active, that when I gained all those followers. But all the way since then, sometimes I do provide some valuable insight, and I get a whole surge of followings, and then we get a bounce, and I keep calling that to not be alt season, and I get a lot of people unfollowing me. It's just it's a great sentiment for me. And again, I'm not chasing any kind of big followings, but I just want to tell you how mass psychology also works, and how crowds function. But also coming back to the point about the money flow, so we're looking at the market cycle bottom for BTC. We had a couple of small alt seasons. You can call them bounces. If you actually were here for 2017, everything else apart from the 2017 move, you should be essentially calling it a bounce, right? Because this was the only real sustained move, and this was the only move that was essentially life-changing for anybody who was a part of it in any kind of half sensible way. And what you want to understand is that we got the BTC market cycle bottom, we got a couple of significant bounces, and then we got the BTC halving. Right after the BTC halving, what we did get is a bit of a bounce in alts against BTC, and this was essentially the time when BTC was consolidating. And once BTC started moving on its own, alt BTC just eventually got wrecked quite hard, and this was, I think it was about 6 months or 7 months of a perpetual downtrend, if I remember correctly. Yeah, it's about almost 200 days of a perpetual downtrend, and while BTC was in an uptrend. If you want to see what BTC was doing, you can just add BTC here and just have a look. We'll have to go a bit closer. So zooming in right here, you can see that we had the BTC halving, and we did get a bit of a dump, and essentially BTC was consolidating. But you can see at this time when we did end up having BTC consolidating, and the point where BTC essentially moved on its own and then started to drop while the halving, all BTC really increased in value. And then while BTC was consolidating, alt BTC was going sideways, with a lot of people anticipating that this rally will continue. And essentially what happened was this trapped everybody who was on Twitter, or who was actively trading alt BTC, or who had scaled in for a higher time frame move, because everybody saw this kind of structure, a bottoming out kind of structure, and people scaled in for a higher time frame move. And essentially what happened was that all the new money that had to flow into the ecosystem, it flowed in through BTC. And what happened was that alt BTC got absolutely decimated till what was BTC breaking all-time high. Once BTC broke all-time high, and it's all the money again got a distribution. And first the initial move was BTC drop, with alt BTC moving up, but eventually this was the golden period, when BTC USD was moving up and alt BTC was moving up. This was the best time to actually, what they call to hodl. This was the best time to do that. So what we are looking for, and what essentially I am looking for over here, is for that same period of time. When is this it? Is this going to be it? First of all, if we are again only extrapolating from one previous market cycle, but also to be using your sense, what are we looking at? What kind of scenario are we looking at in BTC right now? You do know Paul Tudor Jones. If you have not looked at Arthur's BitMEX article, please have a look at it. He talks about Paul Tudor Jones. He is an institutional manager, not just an investor. He's a fund manager, and he is quite a sought after fund manager. He's a creative person. He's not run of the mill, and you do know that his fund has positioned themselves to put 2% into BTC, and all they talk about is that if the rest of the herd does have to come, and they don't need to go all in like most of crypto Twitter does, but even if they have to take up small positions, that is a significant amount of demand, because it is institutional money. So even 1%, 0.5%, 2%, these kind of position sizes for institutions, they are pretty significant. If we look at BTC and how its market cap, and in relation to that. So they are not looking at altcoins, they are looking at BTC, as an asset, just to hedge what is going on in the world right now, and just to have an asset which is now proving itself to be a new asset class. And they have the CMEs that are there, they have the product which they can trust, and they have a product which has been around for a while. Look at the CME open interest, it has been rising like nobody's business. So that is very significant. So what I want to say is that their money is going to flow into BTC. They're not going to buy your shitcoins. And if their money is flowing into BTC, that is where the interest will be. And essentially it could follow the similar pattern, where BTC is where the moves are coming. So what we want to do then is that if that is what's going on, it is again possible that where all the money flowed into BTC, it will flow back out of alts against BTC till we get another all-time high. What happens when we get an all-time high? Bitcoin goes all over the news, and once we do go all over the news, it's as simple as that. The crowd comes in, and that's the time when the big gains are possible, and that's the time when the market makers, everybody who's been accumulating and working hard on accumulating their altcoins over the last 2 to 3 years, they can be selling to the crowd. So essentially that is the psychology of the previous market cycle. There is a decent possibility that we do have a similar psychology this time as well. So I would request you to keep a lookout for that. Keep a look out for any updates I do put on this chart, or you can just chart something yourself. I have charted BTS because it's very old shit coin, and even though it does not, it's a dead coin because you can see the kind of pumps that we've had more recently after the 2017 odd season. It is still an old coin, and so it's significant in that way. So this is just to explain to you how I view the ecosystem and the mechanics of the crypto ecosystem, and I hope you find some value in this. So before I get down to BTC, I just wanted to show you this fractal. I have not updated it. Essentially, price may have pulled back down to over here, and what I wanted to show you is essentially this 2016 impulse that we had, end of 2015 impulse, the first impulse of BTC moving out of the bottom, and essentially that is what we are comparing to what is happening now, the first impulse of BTC possibly forming a bottom. And what price did then is surprisingly similar on a different time frame. We made the first impulse, and then we actually spent, this is the 3-day chart, so it's different from the daily chart, something different with the time frames, but very similar in terms of sentiment. A very big move, and then what happened was that all the bulls were trapped because what they saw was a consolidation below resistance, and everybody was like, okay, big consolidation before resistance, and we're consolidating since a long time, building a bullish structure, price is going to move straight up. And we did exactly the same thing. We built a strong move. It's a very big resistance level, 10k. We got a strong rejection, did not build any kind of structure, went right back up, and we began to consolidate right below resistance. We spent about 6 days there, and now we have gotten rejected. And what price did even then was came pretty close to that first rejection, so we retraced close to that first rejection, but we were not able to break through and build some kind of a bigger correction. This was the big correction, and we got another retest. This was basically the block that held, and we moved back up. So for now, essentially this was the block that was holding us, holding BTC, but it looks more likely to break. So the market is never, it can, even though it can rhyme, and that's what fractals are for. I mean, essentially what we got from this fractal is a similarity in sentiment. We got caution and able to preserve capital. Essentially, if you're still sitting in cash when you saw all this, rather than buying this resistance and looking for upside, there was a possibility to short it. A lot of people were able to short this, but rather than doing that, this is what this kind of fractal would enable you to do. It's not that essentially it would do exactly the same thing, have an exactly similar consolidation and move out of here. The market is creative. It is possible that it is building a reversal. So many people are looking at what previous reversals BTC has had. That is only natural to do. So if price does have to do something different and something more creative, yes, you do have to be open to it. And there's other methods to find confluence, and there's other methods to look for what is happening. But I did want to show you this fractal because we have had a strong move off the bottom, had one rejection, exhausted the resistance here. This resistance is now exhausted, and now we are building some kind of structure. In this entire zone we are going to be doing something. So let's go to the BTC chart now and look at what are the potential possibilities, the levels we are looking at, and how we can play this. So here's BTC. We're looking at this channel. We were looking at this channel last week as well, and what it looks like is we are going to end up breaking this channel. Of course, if we are to build some kind of a consolidation, a channel is reflecting what was an uptrend, and a break in that trend or a slowdown and a decline in that trend is defined when once you do break out of it. So that first initial big impulse has now slowed down. You can see we've had that rejection, and now price has to build a consolidation and a correction, or a correction, so what were the levels we were looking at? Yes, this was the first level of interest. I explained to you the concept of the anchored VWAP as well. And what I wanted to tell you is also the yearly VWAP, the yearly volume weighted price average, is also close to about 7600, 7700. This is the level where also the yearly volume weighted price averages. I did mention before there are a lot of moving averages within this area as well. The 200 daily moving average, there is a weekly moving average here as well, which is very significant. Significant monthly. It's basically a lot of high time frame moving averages that are used by algorithms. They are very close to this level. So this is the reason I am interested in this level. This is the reason that I do expect that another retest of it can give another reaction. So what is the game plan? What is the game plan for BTC? Well, what we need to see is that once price does breaking down from here, what kind of reaction we get from this 8300 to 8k 8100 level. So if we do break down here and get that solid reaction, we reclaim this range POC, then you do know that similar kind of action from what we saw in the 2015 fractal is going to play out. But if you do see price coming down here and you end up seeing a rejection and a weakness, then we should be looking to pull up our fibs and consider this as one strong move, and look for a retrace, and at least be coming down to looking at that 0.5 retrace, which matches up. Then we look at our total market cap chart and look at the levels there. You can reverse back to those levels. I have highlighted one weaker level and a stronger level further below to be looking at for price. But do remember, like I told you before, that we do have a lot of institutional interest in BTC at the moment, considering the climate, the economic climate and the political climate that we have in the world today. There is interest in what BTC stands for, and also in terms of institutional interest, it is very active over the last month. So it is possible that that kind of demand can sustain these higher prices, and that is the reason that I am looking for a reaction from these levels and actually looking for higher levels. Once we do get this correction and we get these major reclaims, I will discuss what kind of levels I am looking at, essentially to get that bigger retrace that we get on BTC. But to get a slight idea on that, do look at Twitter, and I do look at the previous review as well. I did compare the Amazon fractal with BTC. I think that is significant in terms of its sentiment as well. And the other fractal that we are looking at is the Qualcomm fractal for BTC, and you should look at that one as well on my Twitter. And what you should know is that if we do end up breaking this entire zone and area of support, then it is more likely that BTC and cryptocurrencies are facing a different trajectory, and they're facing different complications which would lead the market to grow differently. So we are at a very pivotal point. For me, I am still more in favor of getting a good reaction here. I will be buying these levels and looking to manage my risk from these levels, and it would be nice if we are able to get a reaction from here. A proof of that will be to reclaim the POC of this range, the one we are currently finding support over. And once you do know that, you can look at the 2016-2015 fractal that we were looking at before and understand that BTC is ready to make a move higher before making that bigger correction that most people are looking for. So we're looking at traditional markets now, and what we're looking at is the Nasdaq on the daily time frame and we have the S&P 500 on the daily time frame below. And what I have marked out is two other places where we had built a correction, we had bounced from there, and the Nasdaq was 2.5% from its highs, 2.5 or near 2.5% from its previous highs, the all-time highs, and the S&P 500 was right below the 200 daily moving average. So we've had this on two different occasions, and on both occasions we did get some kind of a corrective reaction. So I'm just going to go into the S&P 500 because there is one little difference if you look at it very carefully. So what I have here is a moving average. It's a simple moving average, a 200 simple moving average, but you have a red and a green. The green is basically when the moving average begins to point up. So you can see the basic difference that we have is that when we did get a rejection, both the times the daily moving average was pointing down, and currently the moving average has a slight upward trajectory. So this is the only significant difference that can make some kind of difference in this analysis. Other than that, in terms of sentiment, it is quite apt that there is a probability that something like this is able to manifest. In terms of market depth, though, there are a couple of things that we're going to look at which could reflect that this may not be the case, but nonetheless this was very significant, and I thought that it deserves a mention. So here's a quick look at the market breadth, and what we're looking at is four different charts. We're looking at the Nasdaq, we're looking at the VIX, which has been inverted, and we're looking at the Nasdaq against gold. And right at the bottom, what we have done is we've inverted the dollar. Basically, it's the relative strength of the dollar, but last review I did mention that the dollar is inversely correlated with the market right now. So when we invert the dollar, I mean, this is also reflecting in a way the risk on market. So what we see here in terms of the market breadth is the Nasdaq has again just been making new highs on its own. The VIX did not make new lows, but the inverted VIX essentially did not make new highs. Nasdaq against gold did not make new highs, and the dollar, again, this is inverted, so the dollar did not make new lows. So what this is reflecting is that the market is still not completely sure if we are to carry on moving up. This is reflecting a hesitation in the markets. So this is something that we need to be careful of. But there's a couple of other things that are reflecting the market breadth improving. Let's take a quick look at those. We're looking at a chart of the small caps against the SPX, and what you can see is that we've essentially been in quite a strong downtrend since June 2018. And what we have done is that after this is possibly a week after we had bottomed out, we had been going sideways, but small caps now they look to be consolidating and starting to gain strength, essentially, which means that money is starting to flow into the small caps as well, which reflects an improvement in market breadth. And what this reflects is that the potential of the March lows, the March 24th March, 23rd March lows, to have been the bottom of this big drop that we had in the stock market. So because what happens is that initially all the money flows into the large caps, the high momentum stocks, everything that is guaranteed for the institutional investors to end up being solid, in difficult times. But what really does reflect that a market is ending up bottoming is when the market becomes confident enough to start spilling that money over into other instruments and into other asset classes as well. So once we are also seeing an improvement in value stocks, and we are seeing an improvement in small cap stocks. So if we are seeing that, this is what an improvement in market breadth is. Financials are starting to do slightly better than the technical stocks and the technology stocks. So basically, once this is happening, that means that money is flowing and sector rotation is going on, and the things are starting to move to normal, So I mean, and we're not talking about the real world conditions all the way up. I have been telling you that do not gauge it according to the market, because the Fed has a special interest in keeping the market up the way it is. We have elections at the end of this year as well, the American elections, and it's significant. There are many other factors why the Fed would want to do this. Another one I discussed with you was to not allow China, to buy a big part of their currency, of their assets, because they are assets which have a relation to the American Departments of Defense, and a lot of them are available on the stock market. So America had a lot of incentive to keep the markets up, and to not allow people to get that secondary test where China was just waiting to buy. So there are a couple of big reasons, but essentially you don't need a narrative, you just need to follow technicals, because everybody who has been following a narrative has been trying to short this market. But for now, what this would reflect is that, okay, we can get that correction. I did show you a decent chart which had a 2 out of 2 times hit rate, for the NAS being 2.5%, and the S&P being below the 200 DMA. But I do not think you should be, at least for now, expecting new lows, considering that market breadth is improving. So that's another thing I wanted to talk to you about, and it is quite significant. Nonetheless, that 200 DMA on SPX, keep a lookout at it, and if it is to continue to hold as resistance, we should be looking for some kind of a correction in the traditional markets. For our commodities section, this is the big level for gold we were looking at, and we have got a reaction from it. What I would say is that if you are in, this was definitely one take profit level. You should be looking for price to build some kind of a structure, and if we are to take out this level, turn it into support, that would be very, very bullish for gold, because this is the last major resistance level before we can test all-time high in dollar terms. But essentially there's bright skies right above for gold bugs if that is to happen. So if the market does get some kind of a correction, I think there is some kind of probability that we do end up taking out this level and building a move up for gold. So for now, this was still a take profit level, and you should wait for more information on this chart and allow for price to build some kind of structure if this is to carry on. On the other end, this is the big level now, this 2013 yearly open level, and I think once this breaks, I think this rally would have fizzled out, and this is a nice place as usual for longs to be able to manage their risk for further upside. What we're looking at here is an interesting chart. This is the rice futures, and why I wanted to show you this is we have been in a very strong uptrend all the way since May 2019. We've had a very strong year, essentially a 60% move over one calendar year, for rice. You can see that rice rarely does that, but once we do end up building up quite some steam, and this has been a good 10-12 years since price has been in a downtrend, and now we have been moving in a strong impulse. I'll show you the yearly chart quickly, so you can see how big this yearly open $15 level is. So I mean, there's a long time left for the year to close, but you can see how significant these two bars are. This is just a powerful engulfing, and we're getting a follow through this year. So this is quite significant and an interesting chart. Persistent uptrend to play. And again, we look at another high time frame, the quarterly chart. This still has time. I mean, we're still at the end of May, but at the end of June, keep a lookout. This ends up closing anywhere where it is right now. We have another big move coming up for rice. And essentially there can be another 20-25% to play before it can start challenging some really high levels. So keep a lookout at this chart. I think it's very interesting that we have this. I mean, I had an alert for this level, and I mean, this month we have taken this level out. So I find it very interesting because there's a big crowd of volume right here, and we have now there's a week left for this month, so you can just see if we end up closing above this cluster for this month, it would be very interesting. And I would suggest you can start paying attention to this chart, because as a commodity it can still give pretty good returns if you end up trading. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!